Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. It's a weather market, and the weather is good, not just in the United States, improving forecast, but forecasts are improving in places around the world where there were concerns. It's hard to just assume these forecasts will be right, but for the moment, the forecasts have turned in a positive direction, and that's added pressure to the markets. To tie that in with crop ratings were up across the board yesterday. Corn ratings improved by 2% to 71% good to excellent, above the historical average. Conditions improved in 13 states, while declining in only 5. Key states that had been behind or in poor condition had considerable improvements, such as Ohio, 12%, Colorado, 11%. Soybean plantings moved 6% to 90% complete, and ratings improved 1% to 68% good to excellent. Winter wheat condition improved 2%. Expectation was for no change. That brings wheat now to 54% good to excellent, and highest composite rating since 2019. And then spring wheat, which had been in its worst shape in a while, improved 3%. So considerable improvement in the U.S. crops and an improving forecast. Uh, Definitely adding pressure to the wheat market, adding pressure to the corn market, and then you add uh, just significant general factors going against wheat in general that are pulling corn down, such as China's 100% tariff on Canadian canola. That is shifting what's described as hundreds of thousands, if not millions, of acres in Canada to spring wheat. And you add that with the improving outlook for the U.S. crop, and I believe in Russia, Econ raised their forecast for the wheat crop yesterday as well. So weather and improving conditions definitely holding the markets back. Forecast models are starting to shift away from basically in corn we're pulling back all the gains we had from last week. Small gains as the chances of a high pressure system parking itself over the Midwest, bringing in an extended period of hot, dry weather. That helped us gain a little bit last week. It's pretty much being given away right away to start this week, as the miles are shifting away from that ridge and more towards moderate, steady precipitation pattern. We'll get to it in a moment, but I believe it's been described as plenty wet for the most needed areas in the U.S. Trade talks continue between the U.S. and China. Everything is supposedly going well. I haven't heard the emphasis being on agriculture just yet. It sounds like it's between rare earth minerals and some computer products from the U.S. to China. It is said that they do expect to get to agricultural issues perhaps today. They talked all day yesterday, and they are expected to talk all day again today. All this going on while corn and soybean export inspections continue to run well above USDA projections. Unfortunately, we're not seeing too much benefit from that. Perhaps soybeans a little bit. I think soybean strength has a lot to do more with bean oil, and then, of course, progressing talks with China. But the strong export numbers will show themselves at some point. I just hope it's not at the end of the year, or should I say the beginning of next year, like it was this year. At some point, hopefully, this will be reflected in tighter stocks and will rally based on any potential issues at some point. Taking a look at that weather, described as plenty wet in key areas for the next 10 to 14 days. Right now, it really doesn't matter what the weather is. Crop conditions are improving. So it's really all about the forecast, and the forecast says it's going to rain. and that's taken all the concern out of the U.S. market. China, while still dry and rains have not arrived, the forecast is turning towards rain. Kind of sense a pattern here. Russia, rain chances improving. About the only place that isn't getting the weather they were needing or calling for is France. Pretty dire situation there. It's been too dry. They were anticipating rains to fall yesterday. They didn't really arrive. The rain there was a letdown, but not much of a major factor for the grain markets. So having the forecast being better in both, or in all three of, I guess, the United States, China, and the Black Sea region is definitely going to hold back markets. Taking a look at the overnight, it looks a lot like yesterday where we're down with corn and wheat. Wheat down more significantly, but pulling corn down with it. Beans are up a couple cents relative to this time yesterday. Corn is down 9 cents from this point yesterday. Soybeans are about even, and wheat is down about 16 cents. So 16 cents with wheat, 9 cents with corn. That's tough to overcome. And then again, that's a combination of improved weather outlooks, improved crop conditions, and I guess you have to factor in a growing wheat crop in Canada that wasn't really expected at the beginning of the year. But the shift to spring wheat combined with the improving conditions in the United States is putting a lot of pressure on the wheat market, which in turn is putting pressure on corn as well. That'll be it for today. I hope everyone has a great day, and we'll talk to you again tomorrow.